Hey everyone, over the last few weeks, Indian markets are showing some weakness, especially in the mid-cap and small-cap segment. And today there is again a deep correction. So the question is, what factors are resulting in correction in the Indian market? And more important question is, what is the expectation in the near term? So I have identified 3 reasons for correction in the current market and 5 factors that would drive the market movement in the near term that would decide if you should accumulate stocks or hold them or sell them. Alright, let's get started. So let's first start with identifying factors that have resulted in deep correction in the market. And first major reason is massive FI selling. I'm sure you all would be aware that over the last couple of years, FIs have been on selling spree from Indian market. But last week, in just 3 trading sessions, FIs have sold investment worth 30,700 crore. In fact, on 3rd October, they sold investment worth 15,200 crore. And today's correction, we are yet to see what is the selling happening from FI side. Now, all thanks to DIs, they actually absorbed the selling by buying stake worth 26,400 crore. Going forward, this is going to be a very important parameter to decide the market movement. Now, what is happening is FIs are pulling out money from Indian market and they're deploying it in Chinese market. So their Shanghai index, which is their main index in China, has actually jumped by 20% in last 5 days. Just imagine Nifty jumping 20% in a week. That's absolute madness. And one of the reasons is because their index has been underperforming for a long time. In fact, it touched high of near 6,000 in 2007. Since then, it is still down more than 40%. That's sheer madness. Now, the reason is because Chinese economy has been slowing down, and that is one of the major reasons why their stock market has underperformed. But recently, Chinese government has introduced certain packages that has attracted the FIs to invest over there. Now, going forward, whether this trend would continue or not would remain a big question, because that would decide whether Indian market would remain weak or not. So FIs selling would be one very important parameter that we have to track it very closely. Second is your SEBI regulation on F&O. So recently you would be aware that SEBI has introduced certain norms, and although I don't track F&O very closely, but there are a couple of major changes. One is your restriction of weekly expiry contract to 1 per exchange. For example, now NSE will be able to offer weekly expiry only for either Nifty 50 index or Bank Nifty. It cannot do it for both, right? And this would be effective from November 2024. And then second major change is raise the contract size from 5-10 lakh rupee to 15 lakh. And because of which it is expected that market would witness fall in liquidity. Now, this liquidity is important for the market and also for the sentiment. And this F&O ban has probably created negative sentiment for traders and could be one of the reasons why their market is showing weakness. And then third reason is profit booking due to expensive valuation. Now, this is one factor I've been talking about for a long time. After almost 326% rally in last 5 years in small cap index and almost 242% rally in mid cap index in last 5 years. Obviously, if you look at the bigger picture, this blip is just a small correction. Like after this crazy rally, obviously you need some sort of breather for the market. And I'm not surprised when market has shown this slight correction, because I always say these kind of corrections are healthy for the market. The only question is how much further market can correct, and that's where there are 5 factors I've identified that would drive the market sentiment in the future. First is the US economy. I remember doing a detailed video on US economy. So going forward, whether US economy would get into recession or not would be one major driver that would decide the market movement, not just in US but also in the Indian economy. Just to give you a brief idea, if you look at United States unemployment rate, it touched peak of 4.3% in the month of July, but then it has corrected in last couple of months, and September it was around 4.1%. So that's a positive sign. Going forward, this unemployment rate data would be very crucial to decide how is the state of US economy, whether it is going into slowdown or not. Then there are a couple of more parameters. Of course, one is inflation rate. It touched peak of around 9% in the month of May-June period in 2022. That was absolute madness. And then the US Fed started increasing the interest rate, because of which the inflation has fallen. And today it is at levels of around 2.5%, and their range is around 2%. So if the US inflation reaches levels of 2%, which is it has already reached to 2.5%, that is one of the major trigger why the US Fed has started reducing the interest rate. if you look at it, after almost nearly 2 years, so it was this period of May 22 when they started increasing the interest rate, that kept on increasing to 5.5%, and recently US Fed has cut down the interest rate by 50 basis points. So going forward, once this rate cut would happen, obviously it result in more liquidity in the economy, and that would result in increase in growth in US economy. But the problem is that the side effect of this increase in rate for the last 1 to 2 years can be visible in the economy in the near term, and that is the reason we have to watch this unemployment data very closely and figure out whether US is going to get into recession or not. Second very important factor that would drive the market movement would be FIs flows. I've already discussed. If FIs continue to exit from Indian market and let's say deploy money in China or some other economy, we can see weakness. But if FIs come back, which I believe that eventually they have to come back, so that would also decide the market movement. Third is of course the retail participation. The Indian stock market, we have witnessed exceptional rally in the market, and one of the biggest factors is because of retail participation. The kind of SIP flows we have seen that are touching more than 20,000 crore per month levels, this is exceptional. But then majority of this rally has happened post-COVID, when market has only shown one-way rally. Going forward, if market can correct further, it would be very crucial to see how retail participants react to that. So if retail participants continue to deploy their money on every correction, I think Indian market would not see a major correction. Okay, and then of course the fourth factor would be earning growth. We are already in the Q2 result season, so a lot would depend upon earning growth. Of course, at the end of the day, it's all about individual stock performance. So you have to closely track the earning growth. If company does well, the individual stock would do well. If the company does not perform well, individual stocks can further see the beating. And finally, of course, the valuation. You can't expect market to continue to go up if the valuations are expensive, right? So at one point in time, you will realize that the valuations are too expensive, and then you will see market profit booking. So I think that current state is where the valuations are not comfortable, and that is the reason even if there's slight negative news, it is resulting in correction in the market. So these are the 5 factors I've identified. Now, since we are already in Q2 result season, I maintain this kind of Excel tracker that gives a good idea in identifying potential opportunities. It's more than 200 companies in the list, where I also share the comments. This particular Excel tracker, that you can find it in my weekly video series, which is one exclusive video I do every week that include my own investment strategy, stocks I am buying, or let's say if I'm booking profit. And then, like I said, this Excel tracker that we maintain, that helps us identifying a lot of opportunities. But then this is strictly for long-term investor. Finally, I want to conclude with this particular quote. In the long run, one biggest factor that would differentiate the winners from the loser in stock market is conviction. I keep saying that. A 20-50% fall in stock triggers 2 reactions. One is panic selling, where there is no idea about the fundamentals and valuation. And second is accumulation. Just observe this. 1 correction and 2 reaction. One is panic selling and another is accumulation, when the company is fundamentally strong and valuations become attractive. Whether you opt for option 1 or 2 would decide you will emerge as winners or losers. I personally believe that Indian economy has got very bright future. I mean, if you look at the long-term bigger picture, these corrections would actually create buying opportunity. Having said this, whether it is the right point or not, like I said, these 5 factors would decide whether Indian market would continue to fall or whether the bottom would be made. And going forward, since that we are already in result season, we'll keep a close eye on individual results. So this is it for this video. Now you tell me in the comment, what do you think is the major reason for correction in the market and whether it is a buying opportunity or not. I'll see you next video. Till then, take care.